Welcome to the Real Estate Marketing Podcast. My name is Jerome Lewis. I'm your host for today. The Real Estate Marketing Podcast is a podcast where we talk real estate, marketing, business, and leadership. We talk these things for real estate agents, real estate investors, and real estate entrepreneurs. The Real Estate Marketing Podcast is a podcast that serves two purposes. Purpose number one, to educate and inform the audience and listeners. Purpose number two, John, to highlight you, your business, your service, in a way that provides value to you, including market exposure and content creation. With that, we have a very special guest, John Burlett. As a retirement income specialist, John Burlett helps professionals convert forever tax money into never taxed. The services offered are comprehensive and customized, all delivered with a safe haven guaranteed and insured approach. Clients seeking John's expertise, they seek John's expertise when they need assistance rolling over 401ks and other qualified retirement accounts, creating tax-efficient and tax-free income, deferring and eliminating capital gains tax with a supercharged Roth, and establishing guaranteed lifetime income. With a steadfast commitment to retirement stability, John, the co-founder of Core Tax Deeds LLC, leverages real estate opportunities to ensure clients' golden years are as prosperous as their former working years. John's experience as president of Tandem Trust Financial further enhances the ability to devise retirement income strategies that endure the test of time. John, I'm excited that you're here. Welcome to the show.
Thank you, Jerome. I'm excited to be here.
I'm excited to have you. So before I get into, like I said, a lot of stuff jumped out to me on your bio, but before I do that, I wanted you to take us on a journey. Tell us how you got into this specific niche of real estate.
Great question. So 1993, I'll take you back 32 years ago now, 33 years. I read an article in the local newspaper. I lived in a suburb of Austin, Texas called Lago Vista. And the headline said, Japanese economic woes reach around the world to the Texas Hill Country. And I read, it got my attention, said they were going to start selling these properties at a tax sale because they had not paid their property taxes in 2 years. And I ended up going to my first sale in June of 1993. And there was only 2 of us at the auction. And there were 13 properties. The other gentleman was a sage old attorney by the name of Walter Wynn, who's no longer with us, but pretty much a leader, mover, and shaker in Austin, Texas. And he told me, he said, when you bid, I won't bid. And if I bid, you don't bid. I said, okay. So now I know that's not allowed. That's called collusion. But 30 years ago in Texas, by ignorance, that's what happened. So I bought 3 properties, pennies on the dollar. First one I bought was $1,100 and some change. Sold it about 3 years later for $38,000. So you do the ROI on that, it's off the charts. So that's how I got started. That's I bought 3, I sold all 3 within a few short years. I kind of got away from it because there began to get so much competition, people showing up at the auction, bidding the prices up crazy. And you can only be in one county a month. In Texas, we have these tax sales at the courthouse steps at 10 a.m. on the first Tuesday of the month. So it really was limited as far as growth and expansion at that time. So I ended up, my primary focus is retirement income planning. I had a registered investment advisory firm, ended up building my book of fixed annuities business up to about $56 million. And in 2021, a law firm came around, gave me a chunk of money that does estate planning to have my book of business. So I sold my book, I cashed in, I had a capital gain event, and I began doing a deep dive in this new tax incentive called Opportunity Zones. Are you up to speed on that, Jerome?
I do know about them.
Okay. Yeah, it's pretty new. It came out of 2017 Tax Cut and Job Acts. And I like to say to everyone, if you don't have a Roth IRA, shame on you, because it's the best gift Congress has ever given us until the Opportunity Zone statute was created in 2017. The Opportunity Zone, the 1031 exchange, most real estate investors are familiar with 1031, where you're kicking the can down the road, deferring your taxes. tax gain.
That's true. However, let's expand on what that is for those that may not know.
The 1031 refers to IRS code, chapter section 1031. In insurance, it's known as 1035. And that's where you can exchange your gains into a like kind. It has to be like kind, an annuity to annuity, real estate to real estate. And I was kind of getting off subject a little bit with opportunity zones, but they allow you to defer your gains from anything like crypto, stocks, real estate. In my case, I sold my business, had a capital gain. So opportunity zones are a much broader tax incentive. But back to the tax deed world, I again sold my company, traveled 17 states in a motorhome during COVID, which was awesome. Got to look at a lot of opportunity zones and ended up buying an old hotel resort called Rockport, which is a tourist destination miles north of Corpus Christi. And I decided, what do I really want to do? What do I know best? And I know tax deeds. And I started researching again and found out that in the last 2 to 3 years, the trend now is to go to online auctions with these tax sales, which allows us to be in more than one county at the same auction a month, because by statute, they have to take place at 10 a.m. So we started buying in May a year ago in this fund that I have. I'm fund manager for a company called Core Tax Deeds, and we're buying primarily non-homestead properties. We bought 14 properties in the first year, all cash, because you have to pay cash the day of the sale by 2 p.m., cashier certified funds. And it's open to non-accredited investors. Most of these type of offerings, private equity, as you know, are under Reg D 506C and only offered available to accredited investors. Whereas under regulation crowdfunding, pretty much anywhere in the world. I just had a gentleman from Brazil invested $10,000 in our fund. Actually, we just onboarded him this morning. So
Thank you, sir.
That's my background.
Thank you, sir, for sharing that. So I want to go into your bio a little bit and some of the stuff that you said. But on your bio, you said you help people convert forever tax money into never tax. And you mentioned the Roth IRA. So I want you to go a little bit deeper on what those phrases mean for us. And I want you to tell us why we're making a mistake by not having Roth IRA if we don't.
Good. So I like to explain it like this. If you were a farmer, would you rather pay the taxes on the cost of the seed you're planting in your farm, or would you rather pay the taxes on the entire harvest? What would you say, Jerome?
I would say the seed.
Good answer. It's amazing how many people say the harvest, but the 401k, the 403b, all retirement plans, teachers, state, federal, FERS, those are tax deferred. And they're great for, deferring taxes. But come someday, you or your heirs are going to be 100% taxed on all that money. And a lot of people feel like maybe they make too much money to contribute to a Roth because there is income limits to make a contribution. However, there are strategies known as backdoor Roth or IRA conversion, where if you're ineligible to contribute, and by the way, the IRS only allows you to contribute $7,000 a year to a Roth, but there's no limit on how much you can convert from an IRA or 401k. You can, much as you want to swallow and pay taxes on, you can convert all year long. And so depending, everybody's situation is a little different. Time horizon, risk tolerance, tax planning, estate planning, those all come into play, and how much of your nest egg you need to get in tax-free environment versus tax deferred. And also the state you live in comes into play, because some states have state income tax on top of the federal tax rate. So I hope I expanded a little bit on that, Roth.
Yes, sir. So there is a theme that I'm picking up on. You specialize and you have a focus on retirement accounts. What's the passion behind retirement accounts versus some of the other accounts that are out there? What's causing you to choose and focus on that retirement niche?
I think my business was primarily focused on retirement income planning. Why I sold fixed indexed annuities, very safe, can't lose your principal. They're really suitable for anybody's safe money. The other monies that we have that may be suitable for a little more risk, I think are ideal in a Roth account because keep in mind any money you have in a Roth, if you have, there's a 5 year clock once you make your first contribution or a Roth conversion. You have to have had that 5 years go by, and then you have to be over 59 and a half for all that growth, all the appreciation, all the gains you can take out totally income tax free. So I'm very passionate about the Roth. The first property I bought, I mentioned for 1100 some change. I did it in an IRA, and I'm a pioneer in the self-directed IRA world. Do you know of John Heyer by chance?
Yes.
So he's an absolute guru tax attorney that I admire and got to know a little bit in Puerto Rico. And he coined me the self-directed IRA pioneer. Because think about it, in 93, there were probably less than three custodians that allowed you to do self-directed IRA and buy tax deed properties. And I found one, and I rolled over my IRA to a self-directed IRA. And thinking back, if I would have bought those properties in the Roth IRA, I mean, it would have been that much more beneficial to me and my beneficiaries.
Okay. So let's say, let's do like a little, I don't know, role play or imagination. Let's say I'm, I listen to this podcast. I'm a brand new person. I listen to John. I listen to Jerome. I like what they're saying. What do I do? What are my next steps? Do I just go out and get a retirement account of Roth? What do I do? What are some next steps that I can do so I can?
Everybody's situation is different, but if you
Right.
can't find a custodian that you're happy with, and I can name off a handful if you'd like for me to, there's Alto IRA, Intrust, Pensco, Inspira. These are all called third-party custodians. To have a self-directed IRA, you must utilize a third-party custodian. And there's fees associated with it, typically in the neighborhood of $300 a year. And then you choose if you want to invest that Roth in crypto, you want to invest it in precious metals, stocks, buy a business. You direct. It's self-directed. So if that's too complex for anybody at this stage in their journey, go to your credit union, go to your bank, ask them what's the minimum to open a Roth IRA. If it's $100, open it because it starts the 5 year clock. You can later roll money into it, fund it other ways, but get that 5 year clock going.
Okay. And let's say they listen to the podcast and they want guidance and help from you. What are the next steps then?
I'm available by phone, text, email. I have the offering portal by law, SEC regulations. I can't make any statements about returns and past performance, but it's all on this offering portal, which is a broker dealer. All the investment money come through this portal. All the disbursements go out of the portal, but that web address is invest.coretaxdeeds.com if that's of interest. I have a website for the financial planning aspect of my business. If someone wants to talk about either retirement accounts and annuities, that sort of thing. Tandem Trust Financial is the name of my firm. But I'd like to get on a phone or Zoom and walk people through, get to know them first of all, find out where they're at in life, what's their goals, and then make some suitable suggestions.
Okay, so your preferred method of contact would be like over. You prefer them to contact you over phone. You want to have a conversation. You want to be human to human. How, like, do they visit a website? Do they call your phone number? You have a phone number, email address. How can they learn that information so they can reach out to you and have that human to human conversation and connection that you specialize in?
I think the best would be email John at coretaxdeeds.com. And then on the email, I have a link for a calendar link. Someone can jump on my calendar and schedule a Zoom call or a phone call. Text 512-431-0802 or a phone call. If I'm available, I'm answering the phone.
Okay, thank you, sir. And I would like for you to share with us one of your favorite case studies, an example or story of someone you're like, you know what, we took this person from here to here based on this strategy or this guidance or this piece of advice. You have a story like that?
Well, I have hundreds of those kind of stories where I've helped my clients get to retirement. And my focus was on people in the retirement red zone that are 50 and up. They've done a decent job with the accumulation stage of life, but they hadn't really taken time to decide how they want to be in the distribution stage of life, while they're in their go-go years from 60 to 70. That was kind of my niche. So I could come up with hundreds of stories, but I'd like to tell you a couple stories about some tax deed properties we bought in this fund this year. I think that might be more exciting. For example, last 2 months ago now, we bought an old shrimp farm in South Texas, 6.5 acres, that used to belong to a Taiwanese shrimp farm. And you can look at the property on YouTube. They went bankrupt in 2001 because they produced some kind of a toxic, poisonous shrimp, and it was several hundred acres. So we bought 6.5 acres for $8,500. Just this month, we hit another home run. We bought a hard corner commercial lot, a little over an acre, for $5,100. Talked to a local real estate broker that believes we can get $4 a foot on that site, which tallies up to close to $200,000 on a $5,100 investment. So lots of home runs. I can't really, there's no guarantee in the real estate investment world. There's not like the annuity world where there's guarantees and that's rock solid. Within real estate, there's risk associated, but we've spread the risk out. Your money's in a fund and you own a little bit of piece of all the properties we purchase. Here's our best story ever. In August of last year, we bought 15.6 acres in East Texas, Harrison County, near Marshall, Texas. And we had no idea. We paid $20,100. Had no idea that the mineral rights had never been severed from the dirt. So we ended up getting in payout status on 3 producing gas mineral wells on this acreage we bought for $20,100. Unfortunately, that got redeemed in February this year in the 6th month. I don't know if we got into the redemption laws in Texas, but turns out, we had to pay us 25% penalty, which is a 50% first year yield. Plus, we were in payout status on that mineral for 5 full months. We may get a final check.
Awesome.
That's kind of exciting. I mean, it was a huge windfall we had no idea we were even bidding into.
Yes, sir. Thank you. So, please recap us. Tell us again how we can best reach out to you: phone, email, website, and then I'm going to get you out of here and let you go.
Awesome. Thank you, Jerome.
Absolutely.
Look forward to hearing from anybody in your space that's listening to this podcast. My name again, John Burlett, 512 area code 431-0802. I have a website, tandemtrustfinancial.com. Another website is coretaxdeeds.com if you're interested in the real estate. And we only buy in Texas, by the way. That's this area I know really well. And then there's the offering portal and my email, john@coretaxdeeds.com.
Okay, John, one more thing. If you could close us out with one word, no explanation, which one word would you choose?
Roth.
Roth. I like it. John, this has been excellent. Thank you so much for your time today. We learned a lot, and I welcome you to come back in the future and talk more and go into more detail or a particular topic. Thank you so much.
Thank you, Jerome. Awesome.